40 million people have already filed for unemployment. But there has to be a way with which you can have it your way. Investing in stocks has proved to be one of those amazing ways with which you can earn passive income. So in this video, I'm gonna answer this $2.8 million question. How much money do you have to invest in order to make living off of dividend stocks? I'll break down my answer to this question with the numbers and the companies that I think you should start investing in. That and little more coming at you in this video. So before starting investing in dividend stocks, you should understand the basic definition of dividend and what are dividend stocks. Dividend is a way by which a large company shares a portion of its earning with shareholders. Dividend companies are usually blue chip companies which have multiple years of track record of strong earnings. Big companies like Coca-Cola, Procter & Gamble, Johnson & Johnson, and 3M are a few names of these dividend paying companies. So let's now talk about dividend growth. Dividend growth is not the increase of the price of the stock, but companies increase their dividend payouts is what we refer as dividend growth. Companies which have a track record of not only just paying dividends but also increasing dividends every single year for more than 50 years are called dividend kings. And we'll talk about dividend kings later in this video as well. Then the question rises, the money that you are earning as dividend, if you reinvest that money back into buying more of those stocks, what is it gonna look like? So this graph basically shows you difference between dividend investment and dividend reinvestment, which means basically whatever the profits you have gotten, you have reinvested those profits back into the company, buying more shares of the same company. Another key concept to understand is the diversification of your dividend stocks portfolio. There are many ways of diversifying your investment, but one of the way is investing in index funds. It means spreading your money across multiple companies by investing in just single stock. So you won't be putting all your eggs in one basket. This strategy of buying index funds come with a lot of advantages. Diversification is one of the biggest advantages. So you get to invest in multiple companies, and what happens is if one of the companies' share value tank, all the other companies cover and balance out that effect. Advantage number 2 is least management overhead. And third advantage is that your portfolio grows with the pace of the market. Advantage number 4 is that it saves a lot of time. If you want to get the benefits of a stock market growth at about 7% a year adjusted after the inflation, then index funds are for you. But obviously, like any other thing, index funds do also come with few disadvantages. Number 1 is diversification. Yes, you heard me right. Diversification is an advantage and can also act as a disadvantage. Reason being, the top company's profit gets eaten by the loss of other companies in the same portfolio. And disadvantage number 2 is the expense ratio. So index funds basically come with an expense ratio. An expense ratio is the amount of money that basically you get charged for every dollar you spend in an index fund. The lesser the expense ratio is, the better it is. So if we take an example of VYM that has an expense ratio of 0.06, at this level, investors are charged just $6 per year for every $10,000 invested. Okay, so since we are talking about index funds, I would highly recommend you invest in these index funds or mutual funds if you want to invest with moderate to low risk in mind. But if you're a teenager or have just started working and have saved up some money, I would rather suggest you to go ahead and buy some companies' individual stocks which you think will perform better than the other companies in the index fund. Alright, enough of these index funds. Let's talk about individual dividend paying stocks. These stocks are opposite to index funds. So rather than investing in all the S&P 500 companies at once, you get to handpick the individual companies that you think will do better than the others. And also remember, time in the market is always better than timing the market. If you start investing early in your life, you will surely get multiple chances to make it big by investing in individual stocks. Just to give an idea of how much money you could have made if you would have invested $10,000 in Netflix stocks at the time of their IPO, you would have made $3.4 million by the price of the Netflix share at current time. Though it's an ideal scenario, you are most likely to lose some money investing in IPOs than to make more money. So that is why I wanted to create this step-by-step guide for beginner investors to financial freedom. The goal here is to invest enough money to have a six-figure dividend income portfolio. I know it's a long shot, but there's nothing impossible in this world. So let's do this. Step number 1 is getting rid of your debt. It's actually a prerequisite, especially if you have high interest loan to your name. Step number 2 is researching about your interest and writing down your ultimate goal with dividend stocks. And in this case, we are talking about 6 figures dividend income portfolio. Step number 3 is sign up with a free online brokerage account. This could be Fidelity, Vanguard, or brokerage where I have invested like Robinhood and M1 Finance. Step number 4 is the most important one. That is funding your investment account. Step number 5 is start investing. It is as simple as it can get. You just have to pick the stocks, otherwise known as positions or shares, and buy a single, multiple, or fractional share of the company of your liking. Alright, now let's talk about how much money you need to have invested in the stock market to make a dividend income of 6 figures annually. You will need $2.8 million invested in Coca-Cola stocks to live off of just the dividends. But there's a difference in dividend stock investing and growth stocks investing. So although it does take a huge investment for you to start safely living off of your dividend stocks, but think about it. You're not taking a single penny out of your principal. It is basically only the profit that you'll be living off of, and your initial investment will most likely be growing at the same time. So let's get into the numbers. Considering you have made a principal investment on July 1st, 2020 of $2.8 million, your principal balance will likely grow closely to $2.9 million next year after you take the $100,000 out. It's a very conservative calculation. How I got to this calculation is $2.8 million with 3.5% dividend yield, which is the current dividend yield of Coca-Cola stock, yield you $98,000. And then an average annual growth of Coca-Cola share is about 4.5%. So $2.8 million times 4.5% equals $126,000. Now, investing in such a big amount, you are basically securing your principal amount while making dividend incomes that is unimaginable for a lot of other people living in the United States. With this strategy, your money is most likely to grow even if you are taking $100,000 a year out of that. But you should note a point here. Unfortunately, for a lot of other companies, I cannot say the same. I trust Coca-Cola as it has over 58 years of dividend increase track record, and it is one of the very few dividend kings. But mind you, there are other dividend kings as well. With payout ratio less than 20% and a dividend yield of 2.8%, Johnson & Johnson is also a great contender if you want to invest and live off those dividend income. The only issue here is Johnson & Johnson's dividend yield is little less. You might either have to invest more to get $100,000 a year, or you will have to eat through the principal investment. Either way, growth of Johnson & Johnson is also inevitable. So you'll most likely to see the upside investing in Johnson & Johnson as well. Other dividend kings are also safe play for you to live off of dividend incomes. Companies like Procter & Gamble, 3M, Hormel Foods, Colgate-Palmolive with ticker symbol CL, are all blue chip companies. The return on investment in form of dividends for all these dividends paying companies is considered sustainable. Let's now talk about my financial goals and ambitions. Basically, I want to be financially independent as well. I love my job, and I have mentioned this in my last video as well, but being able to work because I want to work and not because I have to work is how I define financial independence. I'm currently far away from my financial goal, but I'm taking one step at a time towards it. I'm positive that I'll look back to this day and feel accomplished. But until then, the hustle continues. Thank you guys for watching. If you guys have watched this whole video, please make sure to leave a like on this video and also leave me a comment, and we might become friends on this financial independence journey. I'll see you in my next video. Till then, take care of yourself and people around you. Goodbye.